Hey traders, checking in on the stock market today. Some more of the tick-for-tick inverse relationship between QQQ and XLF and these two seemingly unrelated sectors I used to make a trade today. And it gave me helpful information that I didn't have on the ticker I was trading, but I had on the inverse ticker. And we'll go over that trade review and also check in on the broader market, which continues to grind higher. So we'll start with the trade review here and then see what we're looking at as we head into the end of the week and into next week. So looking at the financial sector. So a pattern that I've been using more for my trading in 2021 has been watching for a gap to mark a climax. And in this instance, what I need to see is a lack of gaps on a very significant move. And an example would be in both directions. XLF here, the example is, yes, we had one gap, but then 4 followed through days in a row with no gaps. And then we're setting up for a gap this morning. And that's going over the last 8 days, almost 8%, which for an entire sector, specifically the financial sector, is a very significant amount. So that gap up had me scouting bearish on the morning first thing for that to potentially mark a short-term climax. And just while we're on the topic, I'm looking at hood tomorrow, and I would love for it to gap down because it's the same thing. It's a drop that is very significant. The bears have had complete control, but we are contained. We're not gapping down any day. So if we finally gap down tomorrow and the hourly RSI is oversold, I'm going to be scouting for a daily higher low compared to the all-time low to try and form at that point. So the trade today was on XLF, and I was not live streaming this morning, so I was able to do a lot of scalping. And I was just trading a lot of positions back and forth. And to keep it simple, I just traded XLF, and I used larger position sizes because 1% is a big move on XLF. And if I'm trading Tesla or NIO or any of these other tickers, 1% is nothing. So I have to use larger position sizes, and my maximum position size, we'll call it 4 positions for this trade. And that position size is probably, we'll say almost 10 times, well, 8, it was a big position, but we'll say 8 times larger than my standard Tesla position size as far as the amount of capital that I'm using. And that doesn't necessarily mean Tesla is 8 times more volatile than the financial sector, but I was more aggressive here. And it would have been 4 times an aggressive Tesla position. And that's more in line. 4% on Tesla, 1% on XLF, fairly similar in that regard in terms of their frequency. So first things first, trades. So we're going from bottom to top here, and bell rings, instant short, and then I wait seconds, maybe 30 seconds, second short. I'm now in 2 positions. And again, my max is 4. I'm in 2 positions with an average of, we'll call it 85.5. 85.5. So at that point in time, we see the open. I make an entry right at the open. We drop. We go back up to 38.92. So I have 2 positions pretty much in this first 1-minute candle. We then drop to a new low of the day. Great sign. That's exactly what I want to see. The price dropping down from my initial entry. That being said, we got to 5-minute oversold conditions extremely quickly. 5-minute oversold on this first 5-minute candle. When we were down at the low there, that RSI was tapping 30. That's a back burner trade. We're coming from an all-time high. So I covered half of my position, one of my 2 positions, I covered in first 5-minute oversold conditions. And I went a quarter and a quarter. So essentially, if I have 2 positions, I went a half and a half. Now I got 1. So average sell was 74. This is how I do the math in my brain when I'm factoring my break even as I'm doing all these scalps. So if I cover, okay, average 74, I had an 84, so that's a 10-cent gain. I've got 1 position left. My average now is 38.97. That's my break even on 1 position. We then bounce from oversold right back to the high. V-shaped bounce, that looks a bit extended to me. So I then reshort. And I reshort another position, 85.5, another position, 88. Up to here in 90. So we reject from the high of the day. Okay, good sign. And we pull back. Now I'm anticipating a higher low compared to 38.71. I've got 3 positions. I exit one of those. Now I'm down to 2 at 38.80. So let's just say I made an 8-cent gain on one of the trades that I just flipped. Add 8 cents to the other position that I have. And that is 93.5. and my other one was 97. So I've got two. I averaged 93.5 with 97. And we're looking at 95-ish. And I don't have an exact number in my head, but I just know, okay, I'm roughly around 95, give or take half a penny. So two positions, average 95. From there, we see a bounce right back to the double top. And at this point in time, I'm staring at QQQ. And here's where it helps me. Because I have a normal size position, and I then, on this top, doubled it to an aggressive position. And the reason I did so, not because XLF is extended, it's a blue sky bull. I know RSI being extended on a blue sky bull gives me very little information that I can make aggressive trades off of. But I also know from observation all this year that QQQ and XLF are extremely well contained as far as their inverse relationship over the last, as long as I can remember, which means probably a long time. So at that point in time, I had no confidence in overextended XLF RSI. I had a lot of confidence in overextended QQQ RSI for a bounce. At this point in time, while I'm making these trades, I'm staring at QQQ. Its 5-minute RSI was down in the teens. Here it is at 20, so it dipped down into the teens, and I'm watching, okay, if this is a bear flag, I need to see a bear flag with no follow through and a bounce, because I'm trading XLF short, but I want QQQ to bounce, because I know if QQQ bounces, the inverse relationship is going to drop XLF in the most likely scenario. It doesn't have to happen, but I've seen it happen 95 times out of 100 in the last 100 days, and so that's what I was looking for. So as QQQ's 5-minute RSI is hitting the teens, I am very confident QQQ is about to see a 5-minute oversold bounce. I'm not confident in my XLF short RSI. I'm very confident in QQQ's bounce RSI. That is a clue of information. And again, that's applying my edge as a trader with a bounce trader to take a short of an all-time high name. So I'm in two. Forgot my average now. What is it? 95s. And I re-enter two more. Up here, 88 and 91. So at that point in time, XLF is right up here, testing the high. So 88, I get it just under 90, and then 91, I get that double top. Not sure if I got it. I probably got it after the rejection, right as it was tested, just to be a little bit more cautious. So 88 and 91, what are those averages? Those averages are 89.5. So let's just say I've got 95.5 and 89.5. My average now is essentially 93, I think. 92 or 93. Either way, my average is at the high, and I've got a full load position. 4 positions now at this point with a really good average. So from there, if we had seen a new all-time high and QQQ had flushed down, I wouldn't have been shaken out of that position because QQQ's 5-minute RSI would have been in the teens at that point, and I would have just placed my stop not at break even on XLF, but over probably the psychological level of 39. And that would have been the acceptable dollar loss that I would have taken on the trade, not based on any level aside from the psychological level. So we then rejected from the double top, and then we dropped. So as we're dropping, I got my 4 positions. I scale out, as usual. Scaled out my first one at 82, which is from my average. We'll call that a 10-cent gain or so on one position. That's a half-day maker on one position. So got 3 more. I tried to cover again. This one was a market order that would have filled at 81. Now at this point in time, I have done all of these market orders, and the vast majority of them are the same size. A couple of them were halves, but not many. And they filled instantly. Instant. Both directions all morning. And at this point in time, we're probably looking at right here. So 20 minutes into the day, this market order, and it's a market buy to cover my position, is not filling. And it's sitting for over a minute and 2 minutes. They filled 727 shares. They were giving me 8 shares at a time. Previously, they're giving me 10,000 shares instantly. I didn't mean to say that. They're giving me my shares instantly. Now they're giving me 8 at a time, 10 at a time. And I'm sitting here going, what is going on? You know, sometimes they have an excuse when the morning starts and things get insane and orders are slow. That makes sense. But 20 minutes into the day, this stood out to me and said, why would they not want to fill my market order at the ask? And then it just, my conspiracy theory, whatever you want to say, says they probably want this lower. They don't want my buying pressure adding on to things. So I canceled my order, and less than 10% of my order filled. And then we dropped down to a new low of the day. And that just confirmed my conspiracy theory that it was almost like the market makers were like, wait a second, let's not buy at the ask right now. We're trying to do something here. Give us a chance. And in the end, it obviously benefited me because we kept dropping. And at that point in time, I had exited down in the 70s. I was exiting more and more positions. So now I've got over a day maker, a day and a half maker, pushing a 2-day maker. And I leave one position that I will potentially swing. And then I was watching a 15-minute oversold bounce. And we kept dropping down. And I'm saying, okay, first 15-minute oversold conditions from the all-time high. I'm absolutely looking for a bounce here. And so I covered half of my one position left in the upper 60s. We get down here, and then I started going long. I have a swing size position that I'm going to try and swing. I start going long, 38.66, 38.61, I believe I had another fill. And the mistake I made was ditching those too early. I was leaving in the middle of the day, right around noon, but if I had held on an extra 45 minutes, it would have been a much bigger win. But in my mind, I'm thinking, okay, I don't want to be over trading right now. I've got a great short position. My thesis, bigger picture, is looking for daily consolidation. So I don't want to overtrade this, and I don't want to focus too much on the other direction. In the end, it was a great V-shaped bounce, and it would have been just as much of a winner to the upside as it was to the downside. In the end, it was just a very small winner playing bullish, and then I exited and said, no, you're scouting a 15-minute lower high to potentially add back your positions. And then we started to get bounce follow through, and I started to add back a position. So I've got a half of one that I'm going to swing, try and swing. I add back another position at 38.80, another position at 83, and then I left the computer, stops over the high, and by the time I came back, I said, that looks like an hourly cup and handle. Left side of resistance, consolidation, right side unable to break it, and then a little bull flag. I said, I don't want to swing. If I wanted to swing, what I needed to see was a 15-minute oversold bounce into a new low of the day. That would have been bears proving it to me, and I would have been a confident swinger. But that didn't happen, so I took a small loss on the positions that I added with an average of maybe 38.81. Probably covered it in the 38.83, 84s. And I covered everything in that range. And just said, nope, not the setup. Bears didn't prove enough. Taking my gains on the day and leaving it at that. So with the little loss, I probably ended up with a day and a half plus maker. But everything about this trade, about going aggressive, was the inverse relationship to QQQ and the oversold RSI. And also the gap up open on XLF. So now I'll start tomorrow with a fresh clean slate. If we gap up open again, I'll probably do it again. And it's just a higher low every day, 7-day pattern. Definitely overextended in terms of percentage move. Look at the RSI. In Blue Sky Breakout, we know the RSI can definitely go higher, but there's plenty of instances with the RSI topping out right at 70 or right above 70, which is where we are right now. That's enough for me to be keeping an eye out for it. So I just like the setup with the gap up open, and I liked being able to position myself with the initial profit taking, but that was that. So we got SPY. Bulls in full control. Higher low every day. We had one little day where that pattern broke, but essentially 7 days in a row now. All-time high close. The range picking up a little bit today. As far as the size of the candle, the close up at the high. Bulls in complete control. Slow grind higher as the cycling continues. Again, it's just perfection rotation. QQQ looking for a daily higher low. Did change the hourly trend today. Looking like our daily higher low compared to 362 may be set. Breaking the high of today will make that a lot more convincing tomorrow if that happens. And then we'll be looking right back at the all-time high. We'll just call it 370, which we are currently less than 1% away from. So today we saw green QQQ to the tune of 0.36%. The healthcare sector was up 0.79, and XLF was up 0.18. So our lead sector, XLF, took a breather, not a significant one, but it took a little breather, and the other names bounced on the daily. So XLV had just confirmed a daily downtrend and sees a solid bounce. What's a daily confirmed downtrend with no follow-through mean? It means zoom out and scout a potential weekly bull flag. That's a possibility. We're going to have to see XLV bulls regain the hourly trend in their favor and confirm the follow-through tomorrow. But if we get that, then we're going to call that a potential weekly bull flag. IWM, still trying to set a daily high or low here at 220.47. Bulls have to get over 225.21 to confirm that the daily uptrend continues. And what bears want to see right now is a failure to break 225.21 and then drop down and break 220.47. That would lose momentum and potentially indicate the weekly lower high is set, and watching for weekly consolidation from there. And again, this just isn't a convincing bounce at this point. That being said, neither was XLF. Definitely a different pattern, but bulls turned on the jets once that range broke. Biotech sector trying to set the daily high or low. Hourly, not a clear trend change for me. Definitely need follow through tomorrow if we're going to say that the daily high or low is set, but it looks like it is at 124.29, and the bulls need to get back over 129.66 to try and keep this weak daily uptrend going. Semiconductors, trying to get a daily bounce going, lower high every day for 5 days. Looks like a little volume climax attempt, but we haven't changed the hourly trend bullish at this point. We're just trading sideways. So if the high of today breaks tomorrow, new daily support level established, and we then scout a lower high, anything under 271.79 as the most likely scenario. And then the question is, can we see a confirmed downtrend? How big is the bounce on the daily from here? Solar sector, entered a daily downtrend, not much follow through at this point, but the weekly consolidation is underway. And again, it's just an equilibrium. High of the initial bounce, higher low, lower high, and anything above 77.49 is a weekly higher low. MSOS continues its pullback. Bears have a lot of confidence. It's a weekly bear flag at this point. The bulls would have to get over 37.50 to prove that it is not a weekly bear flag. And for the Canadian MJ names, we're now pulling back with another red day, looking at CGC. So yesterday I stopped out of CGC, and we're pulling back and trying to form a daily higher low compared to 18.25. And again, we're just tightening it up still. And on ACB, I stopped out of a swing. So essentially this week for me is a bunch of failed swings and just small losses on all of them because it was just my initial attempt, but not a good week for establishing those swing positions. And still keeping an eye on things, but not going to be as aggressive now. That was my one chance to be aggressive, and so my aggressive attempt failed. And so now I'm being a little bit more cautious, not giving up, but being a bit more cautious and a bit more picky. And TLRY, same thing. Lower high set, and now testing the triple bottom at 1388, which held, but a daily equilibrium tightening up here. There's also the psychedelic space. MNMD looks very similar, trying to break this falling wedge bullish with the confirmed daily trend change. Bulls have to get over 319 to see follow through. And another psychedelic name, recent IPO, ATAI, all-time lows, but look at every time we're hitting a low here. The bulls are starting to see some accumulation, and the hourly is a falling wedge. So I'm now starting to pay attention to this name and just looking for an all-time low to be set and the scales to tilt as far as supply and demand here, and just watching this pattern. So I'm still keeping an eye on the MJ and psychedelic spaces, and they are correlated to each other. They have similar daily setups, which are showing to me what I perceive as some bear exhaustion as we're just slowing down significantly, but bulls haven't proven anything yet. The VIX continues to drop down, breaking to the lowest price in over a month, and we're looking down at the 14s now from here. Bears in complete control the last 2 weeks. The dollar is a potential daily bull flag inside a potential weekly bull flag. Very healthy daily consolidation at this point. Just looking for a daily high or low. Gold still bouncing, hasn't topped out yet, but we're looking for that top to be set shortly. If we see a bear break of our new 4-hour high or low, 1741, our daily top of the bounce is likely set. Silver isn't even getting a daily. They're going in opposite directions. Silver's trying for a higher low compared to 2210, while gold is bouncing. This is probably the most inverse to each other they've been anytime recently. Miners, quick daily lower high, already dropped to a lower low, so technically the bear flag confirmed, but you could say it's a double bottom by 2 pennies at this point. Oil, watching for a daily lower high to be set as we're coming up to resistance of 70.18. Little 4-hour uptrend to be watching. If we lose the 4-hour uptrend, then our daily lower high is set. But I'm finding the clarity on the weekly as we're right back in the middle of this weekly equilibrium. Natural gas bears getting follow through. So remember the hypothetical trade I talked about with the 12-hour lower high top fish, which is my style of bearish entry, and it is now paying off. And I forget what the scenario we gave was, but let's talk risk to reward. If we're talking 412 was an entry, let's say it's not even that ideal. 410 is a bear entry. You're risking 12 cents to get stopped out, and at this point, you're up almost, and at the low today, pretty much 2 to 1. And the weekly consolidation is shaping up. PENN, the swing trade I was stopped out of yesterday, looks great. So I may miss this one, but that's going to be a frustrating one. And I could have looked for an entry today, but honestly, swing size position and day trade size positions are very different for me. And if I was trying to get this hourly high or low on Penn, the day trade gains that I made in XLF, you know, pretty much if I didn't stop out at 69, I made more day trading XLF than I would have right now in a position from 69 to 73. So day trading always will have my focus, so I don't regret not focusing on attempting this entry. But for anybody that did get this entry, that's a great looking daily high or low. And if we see a bull break of 74.87, we confirm that daily trend change. The one lesson I will take from here, if I do end up without a position, which is entirely possible, is I shifted my game plan. And if I did not shift my game plan, I would have nailed it. My initial game plan, I forget if I said it in a recent video, maybe 2 days ago, but it was initial entry in the 71s. If this is not our daily high or low and we keep dropping, it's a small enough entry that I am going to look to enter a second position in hourly oversold conditions. And if I had stuck to that game plan, I would have entered in the 68s in hourly oversold, and I would have had a break-even position in the 69s, and it would have been a larger position, and it would have been a very worthwhile swing at this point. I would be out half today, and I would have a break-even under the low of 68. But what changed my game plan? The fact that we saw a big enough move that this looked like our daily high or low. We broke the high of it 2 days ago on Tuesday, and then we dropped to a lower low. That alone was enough to throw me off because I want that waterfall drop. So that shifted my game plan. In hindsight, shouldn't have done that, but that's the way it goes. So the lesson is sticking to that original game plan would have been more ideal. But again, when there's so many trades in this market, you know, if this one goes away without me, I'll take the information I'll take with it was I was right, but I fumbled the execution, which again is fine because there'll be 100 million more opportunities over the next 100 million years. Have a good day, do good things, and we'll see you next week. Live Q&A Sunday noon.